Hey everyone, welcome back to the channel. If you're new here, I'm Govi, and today we're diving the most powerful wealth building tools in the world, real estate investing. You don't need to be a millionaire, you don't need to be a financial genius, and you don't need to own 20 properties to get started. In this video, we're walking through real estate investing in a clear, simple, beginner-friendly way. What it is, how it works, how to begin, and the smartest strategies to build wealth long-term. Grab a notebook, hit subscribe, and let's get started. Section 1. Why real estate? Real estate has created more millionaires than almost any other investment category. But why A1? Tangible asset. Unlike stocks or crypto, real estate is something you can see and touch. People will always need a place to live, which gives real estate built-in demand. 2. Appreciation. Property values tend to rise over time. You buy today, and in 10, 20, or 30 years, the price is usually higher. 3. Rental income. Real estate can pay you every single month while you sleep. This is what we call passive income, and it's the golden ticket that attracts so many investors. 4. Leverage. This is a fancy word for using other people's money, usually the bank say, to buy an asset. You can control a $200,000 property with a much smaller down payment. 5. Tax benefits, deductions, depreciation, interest write-offs. Real estate offers more tax advantages than almost any investment. With all that combined, it becomes clear. Real estate is one of the most accessible paths to long-term wealth. Section 2. The 4 main types of real estate investing. Point 1. Rental properties. This is the classic strategy. Buy a property, rent it out, collect monthly cash flow. Pros: monthly income, long-term wealth. Control over your asset. Cons: property management, repairs and maintenance. If you don't want to manage tenants, you can hire a property manager. 2. House flipping. Buy a property, fix it up, sell it for a profit. Pros: quick return, creative and hands-on. Cons: higher risk, requires time, contractors, and good market timing. This is more of a business than a passive investment. 3. Real estate investment trusts. REITs are like buying shares of real estate in the stock market. Pros: no property management, low cost to start, very liquid. Cons: no physical ownership, market volatility. Great for beginners who want exposure to real estate without owning a property. 4. Real estate crowdfunding. Platforms allow multiple investors to fund a real estate project. Pros: small amounts to start, access to bigger properties. Cons: longer lock-in periods, platform fees. Crowdfunding is a middle ground between REITs and direct ownership. Section 3. How to start investing in real estate. Step 1. Know your goal. Ask yourself, do I want passive income, a flip, a long-term rental, hands-off investing? This choice guides everything else. Step 2. Define your budget. You don't need to be wealthy to start. Options include using savings, FHA loans, house hacking, partnering with others. Even $500 can start you in REITs or crowdfunding. Step 3. Choose your market. When picking a location, consider job growth, population growth, safety, rent demand, property taxes. Cheaper doesn't always mean better. A $150,000 house with strong rental demand can outperform a $500,000 house in a slow market. Step 4. Analyze the property. Here's the simple version. A good rental property should pay all its expenses, provide some monthly cash flow, be in a location people want to live. If it breaks even or slightly positive, it's usually a solid investment. Step 5. Financing your first deal. Types of loans: conventional mortgage, FHA loan, low down payment, VA loan, zero down if eligible, hard money for flips. If you have a good job and credit score, lenders will typically work with you. Step 6. Property management. You can manage it yourself. Hire a property manager, usually 8 to 12% of rent. If you value your time, a property manager can be worth every penny. Section 4. Most beginner-friendly strategies. 1. House hacking. Buy a multi-unit property, live in one unit, rent the others. This can sometimes allow you to live for free or close to it. 2. Rent-ready single-family homes. Buy a simple home in a good neighborhood and rent it to long-term tenants. Low stress, long-term wealth. 3. REITs for beginner investors. Start investing in real estate today, even if you have limited funds. Section 5. Common mistakes to avoid. Mistake 1. Buying with emotion. Real estate is not a dream house purchase, it's a business decision. Mistake 2. Ignoring expenses. Don't forget repairs, vacancies, insurance, property taxes. A property that looks profitable can actually be a money pit. Mistake 3. Poor location choice. A good property in a bad area is still a bad investment. Mistake 4. Trying to time the market. Markets go up and down. The most successful investors are the ones who stay in the game long term. Mistake 5. Not doing enough learning. You don't need to be a pro, but you do need a basic understanding before you jump in. Section 6. Building long-term wealth in real estate. Real estate isn't a get-rich-quick plan, it's a get-rich-for-sure plan. With every year, your property appreciates, your tenant pays down the mortgage, your rents increase, your equity grows. After 10 to 20 years, you can refinance, sell, or keep collecting rental income. This is how regular people build life-changing wealth. Section 7. What I'd do if I were starting today. If I was starting from scratch today. 1. I'd save a small emergency fund. 2. I'd learn a bit about my local market. 3. I'd start with either house hacking, a simple single-family rental, or REITs if I wanted a passive start. Real estate doesn't require perfection, it requires action. That wraps up today's video on real estate investing. Whether you're trying to buy your first rental property or just exploring the idea, remember, the best time to start was years ago. The second best time is today. If you found value in this video, like, comment, subscribe. For more financial and investing breakdowns like this.